And good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's Monday, the 25th of April. Hope you all had a good weekend. It was actually a pretty nice weekend, although this morning there's a cold easterly wind and it's blowing straight through the stock market. And the market looks horrible this morning. Paul, how are you?
Yes, it was a nice weekend, I have to say, as well. And yes, we can see that in the gold market too, with precious metals selling off as well.
Everything's selling off. It's all doom and gloom. But there again, when it's all doom and gloom is sometimes the time to buy. Let's start with the news today. May as well start with the big one, Paul, which is Polymetal, which obviously has got a lot of issues, bearing in mind where it is. But just talk us through their update, first quarter numbers and production and guidance update.
Yes, that's right. First quarter results, or production results released, and I'd have to say they look pretty solid. As you say, given the geopolitical rock and hard place that they otherwise are in, where they produce both from Russia and from Kazakhstan. No fatal accidents on the workforce or contractors in the quarter, and the lost time injury frequency rate was down by 60%, or improved by 60%, as I should say. So that looking very good. 6% fall in the gold production to 372,000 ounces, but that's part of a planned grade decline across one or more of their operations. The revenue for the quarter grew by 4% year on year to $616 million. Their net debt rose by roughly $2 billion, so that's about a change of 1% or so on the back of higher working capital needs as they try to adjust to the sanctions imposed on their Russian operations and having to change their flows in how and where they sell their concentrates as well as their bullion. They tightened up their cost guidance here with a slight increase to $850 to $950 per gold equivalent ounce on cash costs in Russia, and $700 to $800 for the same costs in Kazakhstan, and all-in sustaining costs showing a similar slight rise but tightened up on their cost guidance for the year. So I'd say they're managing very well at this point in time.
Yeah, look, the stock's incredibly volatile, obviously, because of the war in Ukraine. God, don't we all wish that would end? But it's just a very volatile stock right now. We also had Q1 Ops, an update from Hummingbird Resources Pool, which it was at the lower end of production, but I think the market was sort of expecting that, wasn't it?
I believe they were. In fact, Hummingbird being the quoted Africa gold miner, and they had forecasted that they would have a lower production quarter here, which came in at 15,000 ounces, which is down about 2,500 ounces from the fourth quarter of last year. And that due to some planned maintenance works on the processing plants and gradual improvements in mining rates as they've brought in some new and additional excavators in order to improve the mining process or mining rates here. All-in sustaining costs rose to $2,235 an ounce for the first quarter, so that's a rise of about $400 here. And we hope that that's not going to be a prevailing thing for the remainder of the year. So we'll have to watch that pretty closely because they aren't going to make any money at that kind of a cost situation here. They have said they've got the construction begun on the Kouroussa mine in Guinea, and so far it is on schedule for its first gold pour at the end of Q2 of 2023. And they maintained their cost guidance for the year as they had previously stated, so no change in that, which is a good sign.
Yeah, and look, gold, if anything, ought to be one of the safe havens at the moment with the way the world is, but doesn't seem to be quite that at the moment. Anyway, look, one of our Shanghai Mining Club members, Premier African Minerals, George Roach, who I've got breakfast lined up with in Joburg next week. He's done a little JV, hasn't he, on his lithium, hard rock lithium in Zimbabwe.
Yes, this little JV is specifically with the lithium properties he otherwise has in Zimbabwe, which are not part of the Zulu project, for which he's got a drilled resource that he's advancing out here. Now, I thought it came off with pretty cheap deal for the acquirer, in that all they have to do in order to gain a 50% interest in these projects is to spend about $250,000 on exploration here for the up to the end of this year. So George is most keen, obviously, in getting some work done on these projects, as opposed to trying to earn any money short term on them.
Yeah. Now there's quite a few little sort of snippy bits that we can't go through everything. Worth noting, perhaps, that AIM-quoted Spanish tungsten mine at W Resources has had its nomad and brokers all resign, haven't they? Which is a bit of a disaster, really, Paul. Don't know if you've got any view there.
Well, it was interesting that they all had to do so all at once, which means that the W Resources has claimed that the big spike in energy costs in Spain has given them cash flow problems, for which they have obviously come to the decision that they need to come off of AIM as a part of a cost saving measure. But the fact that they all drop off in a hurry either is that there is a widespread consensus among their advisors that yes, that is what they need to do, or that there are very few options otherwise available to them in the short term. So I don't view it as very positive at this point, but we'll see what happens.
But I mean, the read across, obviously, we have our own tungsten play, which is run into similar sort of issues, nothing like as bad. We certainly won't be resigning. But you know, if you're a miner, your energy bills, etc., and some of your costs have gone through the roof, it's fine if your underlying commodity has gone through the roof as well. But if it hasn't, tungsten's only up about 10%. It does become a real issue, and so one does have to watch out for that in the mining space. Paul, we've been talking quite a long time. Are there any final little one you want to mention?
Yes, just with a little focus on Cornwall here, Cornish Metals here, press release. They are going to hold a special meeting of shareholders on May the 19th, and this is because they need shareholder approval to expand the share registry to allow Mick Davis's Vision Blue to put in the 40 million sterling that he has promised in an announcement back in March.
Yeah, and also do watch out later today. We will be releasing our podcast, 30-minute podcast on basically Cornish mining for dummies, is one way of describing it. But it goes through all the research we've been doing at the companies down there, and is a very good way to start understanding what is happening. So do listen to that if you've got time, maybe whilst you're sitting in your hot tub in the garden this evening and enjoying a nice glass of wine. It'll just calm everything down. Thanks, Paul. We'll speak again tomorrow.
We'll see you then.